we detected an unusual trade worth $672,000 on American Battery Technology stock, ticker symbol ABAT. But here's what makes this even more interesting. The stock recently hit a new 52-week high. So the big question is, will it continue breaking out to new highs or drop back down? According to technical analysis, the stock is flashing overbought signals on the RSI indicator, which could mean a major sell-off could be coming soon. But with this kind of momentum, it could just as easily keep climbing up higher. That's why technical analysis can often be confusing. And that's exactly why we also look at the data to see what wealthy investors are actually doing with their money. So in this video, we'll analyze this unusual option activity to figure out whether this wealthy investor is bullish in buying, expecting the stock to move higher, or bearish in selling, expecting it to drop lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into the unusual option activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, unusual option activity happened on October 3rd at around 10:39 and 10:38 a.m. for these November 21st options at the 7 strike calls. Hundreds of contracts for these same call options were being traded multiple times, and they were also being traded at roughly the same options price, about 75 per contract. Keep in mind that options are priced per share, and each options contract controls 100 shares of stock. So to get the actual dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each of these contracts cost $75. And so to calculate the total cost this wealthy investor spent, we multiply the price per contract by the total number of contracts traded. And so how many contracts did they trade? Because it's not just these hundreds of contracts that you see here. There's more than meets the eye. That's why we always take a closer look at the data to improve the accuracy of our analysis. So let's check the option chain for these November 21st options at the 7 strike calls. And we can see that 10,193 contracts were traded, spiking the volume up significantly higher than the existing open interest of just 1,222 open contracts, which tells us these were mostly new contracts being opened, not existing ones being closed. Because it would not be possible to close out 10,000 contracts if only 1,000 were opened previously. At most, 1,222 contracts could have been closed. We always take this extra step to verify the data at a deeper level because many other websites and scanners don't. They simply report every high volume unusual trade without filtering out closing trades, and that often leads to false signals, wrong results, and losses for those following unusual option activity. And that is why our deeper analysis gives us more winning trades than other websites. And in this case, it confirmed that this wealthy investor was opening new contracts. Now, keep in mind, some of these new contracts could be other traders jumping in, including ourselves and our members. But the majority of these new contracts were opened by this wealthy investor we've been tracking. And with this kind of size, they're making a strong directional bet and putting real money on the line. How much? Well, let's do the math. So to estimate the cost of this unusual trade, we take the volume of contracts traded, 10,193, and subtract the 1,222 contracts previously opened, which equals 8,971 new contracts opened. Next, we multiply this number of contracts by $75 each the price we saw earlier on the options time and sales tape, and this equals a total trade size of approximately $672,000 for this unusual option activity. But keep in mind, just because a trade is six figures does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the more selective trades we share on our website. And so, if you want to get access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. And if you join the membership through our website instead of YouTube, you'll also receive additional trade alerts by email because YouTube does not share your email address with us. So if you want more opportunities to profit, make sure to join the membership through our website. Keep in mind that our members also get earlier access to trades like this before anyone else, even before we share with the public. So if you're tired of being late and want more time to act on these opportunities, just head over to our website where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? With that said, even though this trade carries higher risk, we still took it, but we used position sizing to manage our risk. As you can see here, at the 7 strike calls, since this was a new opening trade, we also bought these call options and got into the same position here, marked as POS, which stands for our position, and the green color indicates a buy position. Because, based on our deep research across multiple variables and data sets, this wealthy investor bought these 7 strike calls for about $75 each, the same price as we saw earlier on the options time and sales tape. And so, when we analyze this trade, you can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line over here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line, as the share price goes down, this trade becomes more negative, more loss. And as the share price goes up, this trade becomes more positive, more profitable. In other words, this trade is going long bullish on American Battery Technology stock. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here, the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $7, the stock needs to trade above $7.75 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We do not invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here where you can also learn more strategies to boost your profits. Let us know in the comments, do you think American Battery Technology stock will move higher or drop lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.